Today in crypto, I want to discuss one of the most important topics in cryptocurrency: selling, making profits. I've been getting so many questions on this topic, so I thought I've got to make a video on this. This video is going to discuss selling strategies, what to even cash out into, and even a quick word on taxes. So make sure you stick around until the end of the video. It's going to be packed full of value and a great way to spend a few minutes of your life. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. By the way, if you do not yet have your unstoppable domain, then you have got to hear this awesome deal. So if you don't know what an unstoppable domain is, this is your unique custom blockchain domain name. Now, these things are super cool because they allow you to route payments to one human readable name. For example, you can send Bitcoin and Litecoin to my human readable name, which is cryptolark.crypto. So anytime you want to do it, johnsmith.crypto, bobjones.crypto. It's super cool. It's a major step in cryptocurrency payments. It is currently supported by an ever-expanding number of major wallets, including Coinbase, Huobi, Trust, MyEther, and many more. Every single name is unique, so make sure that you reserve yours before it is gone. And as a special bonus, if you pay using the Crypto.com Pay app, you can actually get a 30% discount and a 10% cash back. That's for a limited time only, so do check that out. There is a link in the description where you can grab yours today before your name gets taken. Okay. So, let's talk about selling your cryptocurrencies. And to be clear, this is a video for investors, not for traders. Trading's a different dynamic, and traders, of course, will know damn well when to take those profits. But investors, I find, are the ones who so often get stuck, unable to sell, and of course missing out on profits, which is why I wanted to make this video. Now, I've covered this topic a little bit in the past, but it's one of the most commonly asked questions in my comment section, so I absolutely have to cover this again. By the way, I do need to say I'm not your financial advisor. You, in the end, have actually got to make your own decisions. I'm just providing you with the tools that you may find useful when planning your own selling strategy. The most important thing that I can get through to you is that you need to make your own decisions. It's so important. No one else can tell you when is the best time to sell. That's up for you to decide. I cannot tell you exactly when to sell. The market is an incredibly dynamic thing. Your portfolio is an incredibly dynamic thing. That is why you have to be in charge and make your own calls. But just understand this: you will almost certainly not call the top. That's real. You have to understand, the real money is made in between the bottom and the top. Also, just accept the fact that you're going to sell too early sometimes and you're going to sell too late some other times. This happens to everyone. It's totally normal. The important thing is making a profit and realizing gains. Like 0.001% of investors, they're going to perfectly buy the bottom and sell the top. Those are bad odds, but the good odds are on making money in the middle area. And I know, I can already hear you saying, sell, Lark, are you freaking crazy, man? Why would I sell anything? Everything is going to go 100x, dude. Holy cow. This advice in this video, it's valuable today. It was valuable last week, and it's going to be valuable in a year. So bookmark it, come back to it if you need some inspiration in the future. Apply it when you see fit. Anyway, with that said, let's get into some practical tips around selling. Now, the first thing I want to hit you with is the regret theory. This is quite simply, what will you regret more? Selling and watching your coin moon, or not selling and watching your profits crumble away as the coin crashes into oblivion and irrelevance? For me, I'm much more driven by having, the old 2 in the hand better than 1 in the bush kind of ideology. Locking in those gains is a powerful way to consistently build your portfolio over time. Look, this market, the crypto market, it's crazy, man. It's notoriously fickle, and your big gains can turn into big losses very, very quickly. Yes, your coin may also moon after you sell, but that's why we talk about the regret theory. In fact, Your coin, specifically yours, is probably not going to moon until the exact second that you sell, and then it'll moon. We've all had that happen before, without a doubt. But running yourself through the regret theory, it's a good way to really keep yourself in check when it comes to making these decisions. But to mitigate the FOMO of your coin mooning after you sell it, then perhaps you can consider this very popular strategy for exiting your positions, which is laddering out. So let me give you a few solid examples here. Let's say you have bought $1,000 worth of Litecoin and you paid $50 for them, so that gives you 20 Litecoin. Now let's say the dollar value of Litecoin doubles to $100 a coin. So there are two options that you can take now. One, you take out 50%. So you sell 50% of your Litecoin. So you're selling 10 Litecoin, meaning that you now have 10 free Litecoin. You can just let those ride and you got your capital back. So that's worry-free Litecoin that you have now. Those 10 Litecoin, they're worry-free on the house. Or perhaps you take a more optimistic approach. You're really, really bullish on the long-term prospects for Litecoin. So when Litecoin is at $100, you sell 10%. So that's 2 Litecoin. See you later. Then when Litecoin is worth $200, you sell another 2 Litecoin, or another 10% of your initial investment. Then when Litecoin is worth $300, you sell another 2 Litecoin, or again, another 10% of your initial investment, and so on and so on and so on. You get the idea. This ensures that you are constantly paying yourself as the price goes up. Now, another idea would be to wait for a 10x. So you buy your Litecoin at $50, you hodl it until it reaches $500, and then you sell half of it, or you sell 25% of it, or you sell 75% of it, or you sell all of it. You can sell all of it too, you can do that. There's so many number combinations. We could be here all day talking about this, but the thing you have to realize, no one strategy is actually superior to the other. It all depends on you and when you want to take profits. Exactly when to start taking profits, how much to take, what percentage, any of that stuff requires you to make those decisions. No one's going to be holding your hand. No one can hold your hand. No one can tell you exactly when to sell. You have got to make those decisions for yourself. Now, one useful method for finding sales points for established cryptocurrencies, of course, is to look for previous points of resistance. Now, this is easy to do. Any beginner can actually find these points quite easily on a chart. So let's look at Litecoin here versus the dollar. We can see these peaks. So these were peak areas of resistance where historically the price topped out. We can see there's an area around $84, $145, $182, $252, and $420. So you can actually ladder your sales targets around these levels, probably just a couple dollars before, because resistance areas tend to get beaten back a little bit. And of course, you can always keep a moon bag later on for price discovery when it comes in. Now, it's not necessary to use resistance levels, but it can certainly be a useful tool for you. What about newer cryptocurrencies, ones that have not had a bull run yet, so you don't have these previous resistance levels to look at? Well, in this case, you might want to imagine how high could the price go realistically, and you can do this by looking at similar assets and their market caps and their historical market caps. For example, when trying to figure out how high the market cap of something like Kava could go, we might look at MakerDAO, which is a very similar decentralized finance protocol built on Ethereum. Now, MakerDAO achieved a market cap of $1.2 billion back in 2018 during the bull run. Currently, Kava has a market cap of around $120 million or so that would be a 10x move for Kava to reach the market cap of MakerDAO. Now, if we assume that this bull run is going to be bigger than the last one, of course, we can look at a market cap maybe 2, 3, 4, even 5 times higher than that of what MakerDAO achieved previously. Again, you can bring in the fundamentals here. Kava's going to be bringing Bitcoin and XRP and other assets in as well, so maybe that gives it even more value. That's a 50x from the current price, a very, very high target, but actually not totally insane for crypto. But remember, you don't have to hold your entire position up to that 50x. You can just sell it in stages on the way up. Then if you never get your 50x goal and tops out at 46 or 47x, guess what? You still made a bunch of money because you locked your profits in on the way up. And even when you get your 50x, you can still keep 10 or 20 or 30% of your position as some kind of just like a super YOLO moon bag. That's cool too. You've already made money and now it's just free crypto basically. It's a highly customizable journey, as you can probably tell. By the way, you don't have to keep a moon bag. To be honest, different coins have different strategies. I personally have some short-term plays that when they, pull a 3x or something like that, I'm just going to sell my entire position. I even have longer-term positions. When they reach that goal, that price point, I'm selling everything. It's all gone, and the profits will go back in, to other coins. Now, why would I do that? Well, one reason is for my sanity. I don't need to hold on to every coin forever. It just doesn't make any sense. Sometimes I just make short-term plays. Sometimes even those longer-term plays. They're just for sale. They're investments. I'm going to sell them. But for my more serious cryptocurrencies that I really, really like, I usually keep a moon bag around, which might range from a smaller percentage up to something like 60% of a position. Also, if you are selling a pump and you are full exiting, then you can also always rebuy your coin later if it retraces. There's actually nothing wrong with that. In fact, it can be quite a good idea, and that's basically what swing trading is finding an asset that you really like and you believe in and you think it's great, and you sell when it goes up, buy when it goes back down, sell when it goes back up. Anyway, of course, the question becomes, what do you sell into? Well, you've got 4 options, essentially. All of them have their pros and cons. You, of course, have to choose what works for you or any combination of what works for you. The first is, of course, Bitcoin. Now, the sole goal for many cryptocurrency investors who buy altcoins is simply to get more Bitcoin. There are only ever going to be 21 million. Bitcoin's unique. Bitcoin's beautiful. It's a special flower in the forest of the insanity of cryptocurrency. And stacking Bitcoin as a long-term store of value, powerful move. That's why all these big macro investors are getting into Bitcoin, so something to keep in mind. The second option is gold. Now, there's actually a few websites like JM Bullion. They allow you to buy gold directly using cryptocurrencies. That's a great way to cash out. Then you can even get the physical stuff just delivered straight to your house, so that's pretty cool. Alternatively, you can do what I'm doing currently, which is using a crypto-backed gold token. My recommendation for this would be Paxos Gold. It's got great security and good liquidity, good company, and of course it is redeemable for the real stuff if you do want it, which is a great additional bonus. The next option, stablecoins, which are simply tokens that represent a dollar or a yen or a euro. My personal preference in this regard is USDC. This is a US dollar-backed stablecoin. I take profits into USDC, and if I don't have any great need for money in my bank account, then I send them over to BlockFi, where I lend them out for 8.6%. So I'm essentially making more profits on top of the profits that I've already made, which is amazing to do. BlockFi is an excellent service for making passive income on your cryptocurrency. You can do stablecoins, Ethereum, Bitcoin, and Litecoin. There's a link down in the description if you do want to learn some more about BlockFi. I think it's a great service. Also, you have to consider that exchanges, they're likely to get really, really busy during the bull market. But if you have stablecoins, then you kind of can withdraw at your leisure to your bank account. You don't have this super stress, gotta get in there and sell my Bitcoin. Oh my God, the exchange crashed. Ah! You don't want that kind of stress. Just you're laddering out of your positions, you're locking into stablecoins. It makes it easy. That way, if the exchange crashes during the peak time, then you already have profits. You're not going to be missing out on so much. You're not going to feel the stress that you have to sell your crypto now and get your cash out. So that's something to think about. There's also ways to mitigate exchange traffic. And I think one of the best is to have, of course, sell orders in before the rush actually happens. Now, if the exchange goes down, that doesn't matter. Your sell order is not going to get filled. The second idea, though, is to actually have a few different exchange accounts. So exchanges like BINANCE and Coinbase, they can grind to a halt during peak times, but other less popular, but still actually really, really good exchanges like KuCoin or BitMax, not MEX, Max, tend to have really not have these problems. So you can actually sell your cryptocurrency over there for stable coins once again. And then once you've locked in your profits, you can move those stable coins from KuCoin over to Coinbase. So you're kind of making it really a simple process here. And then when Coinbase is back up after all the madness is finished, you're sitting in stable coins, you're chilling, and you can withdraw your profits back to your bank account and turn that cryptocurrency or those stable coins into cash. You can walk down to the bank and get in your hand. This tip alone can save you a lot of trouble, so please take note of this strategy. Exchanges like Coinbase, they're great for getting fiat in and out of the market, but because of their popularity, they of course also suffer at peak times, so please do consider opening up an account with maybe 2 or 3 other exchanges just to have that diversity. I've got a dozen, so you can think about that. And the final tip for today, which is something that I always hear people bringing up when discussing taking profits, is taxes. I just want to say this. Don't let the fear of paying taxes stop you from making money. That's crazy, man. Don't do that. Don't do that. Realize this. If you have to pay a bucket load in taxes, congratulations. That means you made gains. You should be happy to be paying taxes in that situation. It means that you won and that you won big. But you do not need to pay more in taxes than is necessary. There are a few tricks to paying less in taxes, the minimum required. And this is very generalized advice. I know people want specific, what exactly can I do, Lark? But I can't really tell you that because different countries have different tax laws, different states have different tax laws. So for most of you following though, some of these things that I mentioned should be quite relevant. The first is that long-term gains tend to be taxed at a lower rate. So if you hold, let's say your Ethereum for more than a year, your Litecoin for more than a year, then you're going to pay less in taxes than if you sell it within that year's time because the tax rate's higher for short-term gains. 2, you can take a loan instead of selling. Remember when we talked about BlockFi a second ago? You can actually use a service like that to put your crypto up as collateral for a loan to yourself, which is usually not taxed. Number 3, you may be able to give your husband or wife a tax-free gift, which might be a nice way to reduce a bit of your tax burden. Usually that's not $1 million, but it might be $10,000 or $20,000, so worth looking into. Some retirement accounts also allow you to plow cryptocurrency into a tax-free account. So for example, in the USA, there are IRA accounts for crypto, so that's something you might want to look into as well. And the 5th one here, get a switched on accountant. They can help you write off losses from bad investments and find other ways to optimize your tax bill that you might not even be thinking are possible. And the final point for this video, do not get married to your coins. If you never sell, then you never make any money. Unrealized gains are when you see the number go up and you don't sell. Realized gains are when you see the number go up and you sell and you make money. That's what you want. This is your goal as an investor, to realize your gains. Anyway, I hope this video was useful for you. Do let me know if you have any other profit-taking tips. Hit us up down in the comment section. I'm sure there's going to be lots of great knowledge down there, so make sure to pop your head in and check it out and engage with the community down there. Thank you so much for watching today's video. Hope you're having a freaking fantastic weekend. Long live the blockchain, and peace out till next time.